Hi everyone, welcome back. Now let's continue our discussion on derecognition with another example. Now let us say on the 1st of April 2022, you have purchased 100 shares of Reliance. RIL is Reliance Industries Limited. You have purchased 100 shares of Reliance at say rupees 2 lakhs. On 30th of June, you purchased another lot of 50 shares. You purchased additional 50 shares of Reliance at rupees 75,000. The first 100 shares you purchased at 2 lakh rupees. The second 50 shares, the second lot of 50 shares you purchased at 75,000 rupees. Another 3 months later, on 30th of September 2022, you have sold 110 shares at rupees 1 lakh 90,000. What did I exactly do over here? You had a total investment of 150 shares with you. You had a total investment of 150 shares with you. Out of that, you did not sell all the shares in one go. You decided to make a partial disposal or a partial sale. All right. You decided to do a partial disposal, which means out of the 150 that you have, you decided that you will sell 110 shares. All right. You decided you will have 110 shares. So after the sale, how many shares do you actually have left with you? You have got 40 shares left with you after the sale as well. All right. So you had totally 150. You decided to sell 110, and you after the sale you have 40 shares left with you. Now there are three things that I would like to do with you guys. One, I would like to calculate the profit or loss on sale using weighted average. Second is profit or loss on sale using FIFO. All right, I'm considering this to be one question. Now you might ask, in the previous lecture in part 1, we did not actually do this weighted average or FIFO. Why are we doing it right now? Because in the previous in the previous lecture of part 1 of this, I had actually I had prepared a case of full disposal. You had one share, you sold that one share. So I made a case of full disposal. This is a case of partial disposal. And whenever you have partial disposal, then how to measure the cost, how to measure the book value comes into picture. All right. Because you ultimately, to calculate the profit or loss, you need sales minus the carrying amount, right? How do you calculate the carrying amount? That calculation is now going to involve either application of weighted average or application of first in first out method. All right, something that we did not do in the previous lecture because we did a full disposal over there and we're doing a partial disposal over here. That was question number one. Question number two is calculating the closing balance. Now over here, you still have 40 shares left with you. At what value are you going to carry those 40 shares? At what value are you going to continue to carry those 40 shares in your books of accounts? Because when you prepare your balance sheet, you're still going to show 40 shares on your asset side. At what value are you going to show it? At 2 lakhs value, or are you going to show it at 75,000 value? At what value are you going to show this 40 shares at is the second question. And the third question is the journal entry on sale. I will only show you the journal entry for weighted average. You can obviously do the journal entry for FIFO because the journal entry does not change. Only the values will change based on weighted average or FIFO method. The journal entry itself is not going to change. Now, before we go ahead, I would like to clarify one thing, that Accounting Standard 13 clearly tells you that only weighted average cost is allowed. AS 13 does not allow any method other than weighted average cost method. But ICAI, for the purpose of practice, which I believe is a good thing, it's also showing you how to calculate the profit or loss if you apply FIFO method. All right. It is having some questions in its book where it's trying to show you how the profit or loss would be when you calculate it using FIFO method, which I believe is good. But in examination, yes, FIFO method can be asked, but when you're doing or when you're applying AS13 in real world, you cannot apply FIFO method. Only and only weighted average cost method is allowed. All right, but yes, you need to know how FIFO method also works. All right. Now let's start with the first part, calculating the profit or loss on sale using weighted average cost method. All right. We have sold, our selling price is equal to rupees 9 lakh, 1 lakh 90,000. All right. So my selling price is rupees 1 lakh 90,000. Now I need to calculate the book value. I need to calculate the book value or the carrying amount or the cost, right? Book value or the carrying amount or the cost is what I need to calculate. The number of shares I've sold is 110 shares, and then the differential is selling price minus book value is going to be equal to my profit. Selling price minus book value will be my profit. Now, under weighted average cost method, what we are going to do is we are going to say that I purchased 100 shares for 2 lakh rupees. I purchased 50 shares for 75,000 rupees. I am now going to calculate the weighted average cost per unit. All right. I'm first going to do weighted average cost per unit. What does that mean? I am going to say that, okay, 2 lakh shares, 2 lakh rupees, 100 shares, 75,000 rupees, 50 shares, which means I have purchased 150 shares together at a cost of 2 lakh 75,000. All right. I had two lots with me, 100 shares at 2 lakhs, 50 shares at 75,000. I am saying that I have purchased on a totality 2 lakh 75,000 shares. I have purchased 150 shares for 2 lakh 75,000 rupees. All right. I've purchased 150 shares for 2 lakh 75,000 rupees. Therefore, my average cost per unit is equal to 275,000 divided by 150. All right. My average cost per unit will be the total cost divided by the total number of shares. Total cost divided by the total number of shares. All right. Which will be 1833.33. All right, it's going to be 1833.33. I have sold 110 shares. All right, I've sold 110 shares. Therefore, my cost of 110 shares is going to be 110 multiplied by 1833, which is equal to 201,666. All right, I'm repeating myself. What I did was I have concluded that I purchased 150 shares for 2,75,000. I spent 2,75,000 to purchase 150 shares. Therefore, my average cost per unit is equal to 1,833. Per unit, it is 1,833, but I sold 110 units. Therefore, my cost for 110 units is 110 multiplied by 1833. Therefore, my book value or the cost is equal to 201,666. All right. So my cost of 110 shares on an average was 2 lakh 1,666. All right. On a per unit basis, it was 1,833. Can we just quickly see how this 1,833 came? If you look at it, the first lot I purchased it at rupees 2,000 per unit. All right, it is clear. I purchased it at 2,000 per unit. The second lot I purchased it for 1,500 per unit. All right, I've said the second lot I've purchased it for 1,500 per unit. 75,000 divided by 50 shares. On an average, each share costed me 1833. You will say 2000 plus 1500 divided by 2 is 1750. How did I get 1833? I got 1833 because the weight of this was more than the weight of this. I purchased 100 shares at 2000 and I purchased only 50 shares at 1500. Therefore, obviously, my average is tending towards 2000. My average is greater than 1750. It is higher than 1750 because I purchased more number of shares in the first lot. I purchased more number of shares at a higher cost. All right. So therefore, on an average, I spent 1833 point per unit. For 110 shares, I spent 2 lakh 1,000, and therefore I do not have a profit. I actually have a loss of nearly 11,666. It is a loss. All right. It's a loss of 11,666. I sold 110 shares for 1 lakh 90,000 rupees. I sold 110 shares for 1 lakh 90,000, which means if you actually look at it, 1 lakh 90,000 divided by 110, my selling price per unit is only, sorry, let me just make this a little neat. My selling price is only 1727, whereas my cost was actually 1833.33. All right, my selling price is only 1727, while my cost is 1833, which means I was bound to incur a loss, and this is the loss that I have actually incurred. All right, I have incurred a loss of 11,666 as per weighted average cost method. All right. Okay, now let's actually do question number one under part B, which is calculating the closing balance of investment using weighted average cost method. What is the closing balance of investment? You are still left with 40 shares in your kitty, and you have to calculate what is the value at which it is actually going to be shown on the asset side of your balance sheet. All right, your closing balance is going to be 40 shares multiplied by 1833.33. All right, the average cost per unit that you calculated earlier, that average cost per unit we applied on the units sold, and the same average cost per unit is also going to be applied on closing balance. All right, the average cost per unit which you have calculated earlier, that will be applied both on units sold as well as on the closing balance, and your closing balance is going to be equal to 40 into 1833.33, which is equal to 73,333 rupees. All right. So your closing balance of investment will be 73,333. Now, if you carefully look, your investments totally that you made was 2,75,000. You purchased investments at 2,75,000. All right. Of that 2,75,000, the cost of investments sold, all right, I can divide it into two. Okay, this is the 2,75,000. If I divide it into two, the first part is the cost of investments that you have already sold off. All right. You have sold certain investment. What was the acquisition cost of those investments? The acquisition cost of those investments was 2,01,666. All right. The acquisition cost or the cost of investments that you have sold was 2,01,666. Your selling price is different. That is 1,90,000. But my question is, the 110 shares that you sold, what was the cost of it? That is 2,01,666. The second part is you still have 40 shares left with you. What is the cost of those 40 shares? That is 73,333. And if you take the sum of part 1 and part 2, it will be exactly equal to 2,75,000. If you take the sum of 2,01,000 plus 73,333, that will be exactly equal to 275. This 201 and 73 are subcomponents of 275. All right, 275 was your total purchases. Of that, cost of investments sold is 201, and cost of investments that you have retained, which you will show on the balance sheet, is 73,000 rupees. All right, and 1 plus 2 will exactly be equal to 2,75,000. All right, so your we have seen how to calculate the profit or loss using weighted average cost. We've seen how to calculate the closing balance using weighted average cost. Let's now see what is the journal entry that we are going to post using weighted average cost. And I am going to tell you option B journal entry. All right. Option A journal entry that we saw in part one was not relevant. All right. That we just saw for the sake of learning. But what we are thoroughly going to apply is option B that we actually saw in part two. All right. Because we are going to prepare an investment ledger account later on, exactly only following option number B. All right. Now, what is the journal entry? Under option B, there were two journal entries that we post. All right. There are two journal entries that we post on derecognition. All right. I am not giving you the journal entry for purchases. Purchases journal entry is obviously clear. All right. Maybe let me just discuss it orally. On 1422, I purchased shares of Reliance. So I will do investment in Reliance debit 2 lakh rupees to bank account 2 lakh rupees. I'm recognizing an investment of 2 lakhs. On 30th June, I again have shares in Reliance of 75,000. I've purchased shares in Reliance at 75,000. So I will again do investment in Reliance debit 75,000 to bank account 75,000. All right. So purchases journal entry is very clear. Now coming to 30th September, I have sold it at 1,90,000 rupees. The first journal entry I would do is I will not see what is the cost of investments. I will not see what is the cost of investment. I will post a journal entry. I will record a journal entry to the tune of sale proceeds, which is I will do bank account debit 1,90,000 to investment 1,90,000. I am not going to see what is the cost of the investment. I am doing bank debit 1,90,000 because I've received 1,90,000, and I credit investment also by 1,90,000 rupees. All right. That is the first part of the journal entry. The second part will be I will further do loss on sale of investment, because over here I had a loss, and losses you debit, right? Credit all gains, debit all losses. Over here you have a loss, therefore you will do loss on sale of investment. The loss was 11,666. The loss was 11,666. So you will debit loss on sale of investment 11,666, credit investments again 11,666. All right. So two journal entries: one, bank account debit 190, two, investments 190. Second journal entry, loss on sale of investments debit 11,000 or 12 11,666, credit investments 11,666. On on a totality basis, investment was credited by 190 plus 11,666. On a totality, sum total of the journal, investments was credited by 190 and investments was credited again by 11,666. Therefore, it was credited by 2,01,666. All right. So ultimately, what you credited your investment account is to the tune of the carrying amount of the investment sold. The cost of the investment sold is what you have actually credited the investment with. All right. You've credited the investment ledger account finally on a totality basis to the extent of its carrying amount or to the extent of its cost of investments that you have sold. All right. I will just pause the video for a second, note down that journal entry, and then bring it up on screen. So this is the journal entry that we've posted. Bank debit 1,90,000, two investments 1,90,000, loss on sale debit 11,666, two investments again 11,666. Now, in case you have a doubt, in the previous example that we did in part one of the lecture, we debited investments in the second journal. All right, over here, we debited investments to the tune of 110, whereas now in this illustration, we have credited investment. All right, so if you are confused as to why we debited over there and why we credited over here, the answer is because we had a profit over there and we have a loss over here. All right, over there, profits or gains are supposed to be credited, right? Gain on sale of investment or any profit on sale is supposed to be credited, and therefore investment was a debit. Over here we had a loss, and all losses are supposed to be debited. Therefore we are debiting the loss, and the credit is going to investment. So investment is more like it is taking the opposite signage. All right, it's taking the opposite signage. Losses will take debit, investments will then take a credit. Gains will take the credit and investment will take the debit. All right, and on a totality basis, the total credit is in 190 plus 11,000, which is equal to 201,666, and this is equal to the cost of investments that you have actually sold off. It's equal to the cost of investments that you have sold off. Now at this stage, if you again imagine the ledger account, you have two bank account 2,75,000, because you have purchased two lots. You have two bank account 2 lakhs, two bank account 75,000. You then have buy bank account 1,90,000 and buy loss on sale 11,666. You have two credits: buy bank account 190, buy loss on sale 11,666. And to tally this ledger account, you will write buy balance carried down to the next period, and if you see the balancing figure, that will exactly be equal to 73,333. I'm repeating myself. If you prepare a ledger account at this stage, you have total debits of 2,75,000, 2,75,000, 2,75, and then you will have two credits also. The first credit will be that of buy bank account 1,90,000. The second credit will be buy loss on sale of investments 11,666. All right. The total credits that you have is 201,666. There is a gap between your debit and credit, and that gap is nothing but buy balance carried down to the next period, because you still have 40 shares left. You're going to do buy balance carried down to the next period, and that will be a balancing figure which will be equal to 73,333, which is what we calculated above as well. All right, the 73,333 that you are getting over here as a balancing figure can actually be calculated as well, which is what we did. We calculated that 73,333 over here as 40 shares multiplied by the weighted average cost per unit. All right. So even if you do not do this closing balance calculation, if you calculate the closing balance as a balancing figure to tally your ledger account, you will still be able to get the answer. This is more a cross verification for you. All right. This is more a cross verification for you that will help you in the exams, where you can actually check whether your closing balance is actually matching with the number of shares multiplied by the weighted average cost per unit. All right. In few lectures or in the few illustrations that we do, let's say in one or two illustrations, I'll show you how that closing balance matches as well. All right. So that is how we would actually solve the question under weighted average cost method. That's it for this lecture, guys. FIFO, I will solve it under part 3. I'm intentionally trying to keep my lectures a little concise. I'll try to do it. I fail to do it all the time, but let me at least give it a shot. FIFO will be done under part 3. All right. Thank you. Bye bye.